Varvara, here we go. Welcome to the Let's Grab Coffee podcast. Super excited to finally do this with you.
Great. Great to see you, George. Thank you for having me.
It's my pleasure. We are definitely good friends, but for folks who might not know you as well as I do, and have had the fortune of sort of knowing you over the time in Chicago over the past sort of 7 years, aside from being a good friend of mine, a trusted advisor, many know you as a finance, strategy, operations executive. You have over 25 years of experience scaling a lot of tech companies, a lot of notable names here in Chicago. You're currently the CFO of Avidbots, a Canadian-based autonomous cleaning robotics company that's growing rapidly, expanding in the US. You previously served as CFO of SpotHero, which many people in the US obviously use quite often as a platform. You were CFO of BenchPrep, an enterprise SaaS company in the education space. And one of your sort of most notable achievements, because there weren't too many, was scaling Gogo, which is an in-flight connectivity company, taking it from 36 million in revenue to over 700 million in revenue in 10 years. You achieved a successful IPO, exiting in June of 2013. So a bunch of different hats. Obviously, as a operator, I would say executive C-suite operator, to an investor. You're an advisor and mentor to many companies in the Chicago startup ecosystem. But more importantly, you're a great human. And I'm very fortunate to know you and finally have you on the podcast.
Thank you, George.
Or maybe as we wind the tapes, I always like to start from sort of the origin story, which for you starts back in Russia. I kind of wanted to talk about, your childhood, just growing up in Russia and what that influence back then has had in shaping your life, your career, and everything that surrounds it.
Yeah, so I grew up in St. Petersburg. I was actually born in Leningrad before it was renamed St. Petersburg. And, went through kind of formative years in, undergrad there, but also during the school years. It was very interesting times for, post-Soviet Union or kind of a country where things were a bit challenging, falling apart. I think financially it's been very difficult. I was blessed to be born in the family that of extremely highly intellectual and just really good mom and dad who basically blessed me with great education. I spent quite a bit of emphasis on math, languages. So learning English as a primary sort of foreign language, and then learning Spanish later on, but also sports and music. And so, and arts, being in St. Petersburg, which is, called like the cultural, capital of Russia. There's a lot of theater and opera and music and arts. And so I ended up going through another school, like music school, and being educated as a pianist. So all of that helps between math, languages, and music. I guess it all comes together. It kind of gives you a really good foundation before you enter college. I started basically one of the things that my mom had always kind of gave me a pretty significant direction in life is really kind of learn entrepreneurship and learn business because of the environment, because, it's very obvious that Soviet Union was falling apart and folks needed to think about more successful models to run businesses and build businesses than state economy. And my math skills and I think entrepreneurship skills were just early developed and kind of when I was entering actually high school. So in Russia in the early 90s, there was a big movement of like private education schools. And so I was one of the people that ended up going into high school that was business school. And so besides just your typical high school math and all the topics you need to study, we were also challenged with business cases and presentations. And so it was very, very creative, very I would say, push my development, pretty far. And then I was able to then enter into University of St. Petersburg in finance and really pursue the education in finance. And then I had an opportunity to come over to the States, but that may be the next question. But that was my initial, I would say, 17, 18 years of living in St. Petersburg.
What's interesting too is, basically what I'm taking in is how important it is to be well-rounded. And that's not always easy, especially with immigrant parents. Like, let's say the ones I've had and sort of growing up in the Middle East, there's always this fight about, going all in on education and really being a technician and prioritizing that as much as you can. But sometimes I feel like if you go down that lane, you let go or you may lose sight of the other pieces like creativity and the arts, right? That actually are so important to making you a fulsome person. My parents were very balanced in that as well. And I think it helped a lot later on in business. So I'm glad to hear that that was an influence, because I don't know if that changes your viewpoint now, maybe with your kids, technician
Yeah,
versus generalist.
I would say for sure. I think, I still believe that providing our kids opportunity to try different things to make sure that they're well rounded, I think is extremely important, as well as sports. That's the other thing I didn't mention. I think besides the going to a regular school and then the music school, I also was quite often being introduced to different types of sports, including figure skating. Of course, Russians are big on figure skating. It's Winter Olympics right now. But in any case, I think sports played also a critical component of growing the grit and perseverance and sort of ability to try to get better all the time, because you're
Competitiveness.
competing with yourself. And even though when you're younger, you're probably, you still think that you're competing against other folks. But as you get older, you realize that those types of skills really help you have like an innate self-improvement, self-development kind of like energy to be able to get better at anything you do. But yes, I think well-rounded is important. I think one of the things that it gives you when you're younger is it gives you just ability, exposure to trying different things. And as we get older, you remember those things in childhood, and so you connect to those easier. And I think you pursue more interests in whether it's career or it's in personal life. And so I think it makes the life more rich.
What was it about finance that originally drew you? Out of all the fields that you could have studied, why this particular subject matter?
I think for finance, for me, it was this. I still find it extremely challenging and interesting to see how the business can be broken down into a set of numbers and how you can basically be the architect of the financial model of the business to really understand how the business can, be created, right? So I think finance is from my perspective, it kind of gives you both the art and the science of helping to bring businesses to life. From the scientific perspective, measuring financial models or helping figure out what your revenue strategy should be, how much you're going to sell and who you're going to sell to, but also, what are the unit economics and how you can get the company to profitability and how you're going to, finance this company, right? So that's on just the pure, corporate finance and just overall financial modeling side. On the art side, what I love about finance, it's a great tool to help people create more structure around ideas. Otherwise, for example, I advise a few startups here in Chicago, and I think what I find is that there's a lot of great ideas, but folks sometimes have a hard time breaking it down into specific, pieces to be able to measure, so we can test out certain hypotheses. And I think finance and math helps you get there. So you can then improve it, figure out where you're off, and so, kind of get better. And of course, for me, I think growing up in Russia, learning entrepreneurship and learning how do we make money, how do we create enterprises that are sustainable and, can be self-sustaining at some point was very, very interesting, regardless of what product or service you really are trying to build. So when I came to the States, I think that's what gave me an opportunity to get to get more specialized, get my education at undergrad, get the master's in finance, and really kind of spend more time on putting together the models that help businesses scale.
Yeah, I love that. I mean, it's literally defined as a blend of art and science, which is why a lot of people are drawn to it. It's also one of those subject matters or areas where it really does involve, accounting, politics, and economics. That's how it was explained to me early on. That's why I chose it for my undergrad. Curious, from your 25 years of both operating, being in the C-suite, advising, investing in companies, what are and this is not supposed to be like an accounting 101. I'm just from a high level, what do you, when you actually observe a company, right? You see some of their statements, you're kind of looking at an Excel sheet. What are some of the high level metrics that signal to you whether a company's healthy or not? For folks kind of interested, curious, from your vantage point, again, nothing too technical, just entertain us in terms of what are some signals, metrics that appeal most to you as Varvara?
Yes. Well, I think there's a handful of metrics. Of course, it depends on the business model. I would say, for example, SaaS company versus your maybe hardware, software, and services companies, they might focus on, slightly different things. But I would say, for example, one of the big things is that how fast you're growing your customer base and retaining those customers. And I think customer churn is a big indicator of your success in the market, but also your ability to grow that base that you want at some point to be able to kind of pull you to profitability. So I would say customer churn is a key, or I would say customer retention, to put it in a positive way, is the highest the customer retention, the healthier the business is. But it also, like, sometimes there's some caveats, but let's just say like that's would be a key. Another metric that I look at that's also extremely important is gross margin. And gross margin is something where you want to have the gross margin as high as possible and try to get there to pick up a few more bips. Because ultimately that's what's going to help you create operating leverage. Because if you think about, you have your fixed expenses, operating expenses, and if you have low gross margin, it's going to take that much more volume to be able to sustain and kind of get the profitability. So the higher gross margin, the better and the healthier the business is. And so there's ways. What I usually try to do is really understand better, how do we make money on the gross margin? Because if you think about it, that's your true unit economics of the business, and there's lots of opportunities, both on the pricing side, on the margin side, and the costing side, on the technology and which tools we use to be able to sort of, drive the gross margin. So that's the second piece. The third piece, I would say, just given the last 3 or 4 companies that I've been part of, is cash runway. There's a golden statement that you never want to run out of cash. And so cash runway is important. I think, obviously, if it's short, less than 12 months, versus if it's longer, let's say 2 to 3 years, or if it's profitable. At that point, the discussion becomes more about capital allocation, how fast you want to grow, where you want to invest. But if you're during the phase of scaling up and getting to profitability, the cash runway is extremely important, because you are making decisions on investments and returns while the company is also scaling. And so you want to be able to position yourself in the place where if you do need to do another capital raise, you have sufficient enough cash runway left to be able to execute that. So again, to summarize, retention, customer retention, I think that's a health score of a customer. Number 2 is a gross margin, how well the unit economics are structured and what's the opportunity there. And number 3, how far is your runway, to make sure that you're always, as a CFO, you're always prepared to either raise capital or think about restructuring your debt, or whatever you need to do to be able to make sure that the company has sufficient cash.
I appreciate that, and thanks for summarizing. It's always helpful. I know it's a loaded question too, and to your point, it depends on the vertical, the industry, the type of company. But in general, like, I think there's sort of higher level signals that you point to, and you're like, okay, this company is healthy, or what should I look at, generally speaking, to determine whether this company is healthy or not. And by the way, for people listening, this applies to whether you're in the company as an operator or actually want to join a startup or a company yourself, right? If it's like new talent and you're looking at a high growth company in your market, these are hopefully certain signals that you should point to and say, okay, well, maybe this is something I want to give a try. What's very difficult, I find, or challenging about the CFO role, Varvara, and I'm sure you resonate, is you have many stakeholders. On one hand, right, you could be in a CFO role that has different, divisions that report into HR, right? What are maybe ops?
Sometimes you have IT,
IT, technology.
Legal, for sure, quite often, in a smaller setting, could report to you. And sometimes you even see like a blend role. Like I had for a period of time at Avidbots, where you have both operations and finance. So there's definitely more opportunities for, I would say horizontal reach, because startups need to figure out how to wear multiple hats and to be able to scale. And once you get to scale, usually what happens is that you give up a chunk to be able to really focus and go deeper on certain functional expertise.
So with this sort of, I love that term, that horizontal reach. Give us sort of the lessons learned of, or the masterclass in stakeholder management, because again, you have a view and lens of the numbers, right? The metrics, where the company's heading to, whether good or not so good. But you also have different stakeholders, both internally and externally, with different incentives, right? They have different objectives. How do you structure yourself in that position as a trusted advisor, and not sort of a gatekeeper or the person that says no and the end all be all because you're overseeing the finances?
Well, from my perspective, I think relationship building with different stakeholder groups is a key priority of the CFO, right? Over any leader, I would say. It doesn't really matter the title, because there's a lot of influence, there's a lot of knowledge, there's a lot of perspective. And I always like to better understand what different stakeholders, how they think, what their needs are. And I think finance is a critical function that way, because we are kind of in the center of enterprise. I would say it's a glue of the enterprise, operations or enterprise finance. And being able to understand specific needs or challenges or and or not understanding how they can, for example, their certain area can be unlocked if something else in across the business can be supported. So I think finance generally has a very, very good view on how all these dots are connected. But as far as like stakeholders, I would say, first and foremost, I think they are the your peers in some ways, right? So in some ways, if you're talking about investors in the board, those folks have a very specific perspective, and as they look at you and as they challenge you and push you, a lot of them have a perspective of other portfolio companies and what they've seen, what good looks like. And so I always like to learn more from those folks and use those opportunities, not only to give them comfort and trust that we've got it from our current, enterprise, but also what can we learn? How can we do things better? Are there companies that do some things in similar fashion, but there's an opportunity for us to, bring us to, for example, Avidbots. So I would say stakeholder management for me, it's more about creating a trusted relationship in the sense of having them understand what they need to know about, finance or how finance can explain or support kind of their area, while at the same time learning and appreciating their perspective. Because I think that's the other thing that we as leaders, we need to try to be more well-rounded, using that term, or 360. And I think those perspectives are extremely valuable.
Well, speaking of 360, obviously easier said than done, right? It's especially as you ascend in your career, right? And if you think back from, because you've held many different finance roles, right? Analyst, manager, investor relations. You were in the treasury function, FP&A, right? And obviously CFO. You were even a COO, and so you've seen and worn many different hats. I should have said and wore many different hats. Nonetheless, a lot of different areas. So curious, as part of that 360, like what sort of capabilities do you think over time, over that 25-year horizon, have really helped you? We talked about stakeholder management. What are some other capabilities that really helped you go from analyst technician to really a finance leader at a high growth company?
I think one of the most important one is realizing that business is all about people, and there's there's another side to a human being than just doing work. And so when you are as a technician, and I think in my earlier years, I was so focused on trying to get the job done and, and really focused more on the work itself versus to kind of building some of these relationships with folks that I work with. I think as I got older, there's definitely more appreciation for the depth of what other people bring to the table and the curiosity about their perspective, their experience, and how that can be applied. And I think what's really important, it's actually interesting because it kind of like overlaps between my personal and professional life, because I think that level of connection to people ends up helping you get business done. And so I used to think that it was all about efficiency, productivity, results. And so I was, to be quite frank with you, I was less about on the emotional intelligence side. I was more about, hey, let's just get things done. Let's move to the next thing. And as I got older, and of course, as I have grown my own 2 kids, I've realized that there's so many different things that really, motivate people. And one of the biggest things that motivate everybody is people just want to be seen and valued for what they bring to the table. And I think it's been a few years as I'm sort of still doing as best I can. Sometimes it can be extremely hard driven as far as like getting the deadlines done. And of course, finance is a very much of a deadline function. So we some of these things you just got to get them done regardless of what some of the challenges we run into, right? But still, I think there's this human element that I think I've learned to appreciate a lot. And I think just connecting to folks and better understanding their story, what's happening in their life, because I think that could either help or significantly impact their productivity or just their ability to get things done. And that's okay. I mean, that's not the end of the world. We can work as a team and get things done.
Yeah, that's I appreciate the transparency here, and I wanted to say it's not necessarily, it's not easy to do it all at once, if that makes sense, right? Like there's different seasons in life and in one's career, and there's different sort of chapters that you go through, and sometimes you kind of have to be the person, especially early in your career, who's heads down and really learning like a sponge and executing as quickly and as hard as possible and trying to make the impact and like sort of recognize, like being seen and recognized, and because that helps with your elevation, right? It's like what Denzel Washington famously says is the 3 seasons for him are: first you learn, then you earn, then you return, right? Return meaning giving back. So there's different seasons, and I think it's important for folks listening that is a natural process. It's easy looking back to say I can do it all at once, but so is life. How important was storytelling, communication for the elevation of your career, and recognizing that maybe it doesn't come naturally to a lot of people? Obviously, you're great at it, and many CFOs have to be really good storytellers. Many executives have to. How did was it natural for you? Did you have to work on it?
Yeah, I think some of it has to do with your personality.
Mm.
For sure. I think I'm generally very outgoing, adventurous, risk taker that's been around and like to do different things. Part of it, again, if you kind of connect it back to my upbringing, so I think a lot of that started from their young age.
Hmm.
And as a result, I think I have some stories to tell, but I also like to connect with folks and kind of carry conversation at different levels. So I think storytelling, communication, for sure. Like these are the lifelong skills that we keep on building, right? So like, and everybody starts at their path, and just as we go along, I think there's things that we can learn and pick up along the way. So, but I think as you get a little bit more senior and in leadership roles, I think the key becomes more about motivation and influence, and the best way to do it is through storytelling or through not to kind of dissecting exactly how we're going to go about the program, because you would like to really look to your team to be able to come back with solutions, even if you know the answer. They say like so, even if you know the answer, but I think just seeing the team to participate and but they sometimes need to be motivated or sometimes need to be inspired, especially true when things are tough. When you're in a startup and you have multiple challenges and you need to prioritize, and this prioritization every day sometimes, gets you to a place where you feel like you're burned out, right? So how do we carry that forward? If you're having like a fundraising process while you're also having to prepare for the board meeting, while you also have to, submit certain and support the business and certain, pricing proposal, things like that. And so all these things are, there's a lot kind of going at you, and how do you kind of persevere through that? And I think that's either story or humor. I would say stories or, humor, sense of humor actually goes a long way. I try to bring that to my team all the time as much as I can, because I think it lightens things up and actually helps to get things done.
Yes. Plus, life is too short. You know, I think we have something like 4,000 weeks on average, if that's not, depressing enough. I think assuming like an average age of 80, but nonetheless,
Yeah.
live it well and have fun, because, yes, our professions are important, they're serious, but you only really have one shot at this, so might as well make it count. So now thank you, by the way. We have a really good lens, I think, of what it looks like from the vantage point of a CFO. Super exciting. We're making CFOs look like the funnest roles on this planet.
The CFOs sometimes stand for Chief Figured Out Officer.
Yes.
So I mean, you're definitely trying to figure things out, and you gotta talk to a lot of people to help figure things out.
Well, you've had to figure things out in many different roles, including Gogo, which I did want to double down on as a case study. I think it's a fantastic story for you. You spent almost 10 years there. You went from treasurer to VP, heading up the treasury function, but also the investor relation function. You lead something like a billion and 1.7 billion in capital markets transactions, different types like equity, convertible and high yield bonds, different sources of capital.
Yes.
You helped lead the company through its successful IPO in June of 2013, raising more than 187 million, which is pricing at the high end of the range. You established, obviously, the treasury function, and there's international components to it. When you look back and you reflect it, as sort of we're talking about it now, you reflect back as like a fun sort of case study. How did you evolve as a finance practitioner, going through what must have been high pressure, sort of time sensitive, really important work that you were in front of a lot of the time?
Well, I think when I joined in the summer of 2008, I joined as a treasurer, and that was a very interesting transition too. I think for a lot of folks listening to the podcast, as they think about taking roles, I was coming off of the VP of Finance FP&A role, and treasurer is not necessarily something that most VP of FP&A folks are looking to join. And so for me, it was more of a kind of a lateral move, but nonetheless, a very interesting opportunity to learn the balance sheet side of things and really learn about raising and thinking about financing strategy for businesses, right? So at the time, Gogo, which was called Aircell, was private equity funded, but we needed to figure out, we were burning cash, and we needed to figure out the proper debt to equity and how we go about terms and how we negotiate the covenants. And so there's all these new areas that I did not know, to be honest with you, because e-college was a capital light model. We were a SaaS company, highly profitable, publicly traded. And so for me, I think one of the things that I think is important in my career and anybody's career is you given opportunities, say more yes than no, because I think they've given you, and of course it needs to kind of align with your general path of how you're looking at it. But for me, so I came over as a treasurer really without having treasury background, but ultimately it's all about numbers and the balance sheet. And so I was able to transfer my modeling skills to really figuring out the balance sheet side and figuring out the capital markets. As far as how I evolved as a finance leader throughout the 10 years that I was there, I think it's just being always, intellectually curious and working as a team and figuring out how to support. Because I think for a few years, my colleague was a VP of FP&A, and so really figure out how do we work with adjacent functions. It's like when you own a certain function and you go into a different kind of rotation, you kind of see how that other function is being done from the third party's perspective, right? So like, because you are at that point, you are working with that function directly. So there's things that you learn through that. So, and I would say for me, it was never stop learning, because not only you're getting better at your own kind of area, but for me, it's always been also observe how all the things come together. And one of the things I think maybe kind of sets me apart, or some other leaders that are thinking about this, is being able to see the, big forest and the trees. I always wanted to kind of connect the dots all together and really understand how the things will play out, as well as understanding kind of what's specifically my area of responsibility, but also how the other pieces kind of work together. And so I think at Gogo, I was able to learn that really well. And I think that really helped me create more of a, comprehensive view of finance, because you're continuing to see all the different pieces of finance, from FP&A, from accounting, from treasury, internal audit, tax group. We've got all those functions. And then as you get, bigger, as the company gets bigger, and as you get involved in, commercial pricing deals, and how we're going to think about margins there, and how we're going to raise capital, how we're going to talk to our private equity, I think all these pieces of perspective ends up being extremely helpful. So you can bring together a story again to different stakeholders. So I would say for me, the evolution really was more about owning my own function, understanding how adjacent functions work with treasury, and I think continue to figure out what can you be of help with to other folks. Like, for example, our VP of FP&A, I remember she and I talked quite a bit, and there was so much to do on the P&L side. And so the balance sheet modeling has always been a challenge. And so we, together through the partnership, we really kind of formed a really good relationship between that. So I would say it's really ability to work as a team and support the business as the business scales. So I think there's a lot of things that at some point, especially when you go through IPO, I don't know if this question has to do with like learning the ropes of becoming a publicly traded company, and that was a process in of itself. But there's definitely things that very quickly you realize that sometimes you need to become a project manager, and lead a pretty significant 2-year process to getting the company ready for public markets. That doesn't mean that I've been a project manager, honed on my skills, whatever. But I think there's things that you just, kind of learn on the as you go along. And sometimes you borrow expertise, and then you bring people to your team to help you kind of beef up that potentially blind spot. So I think maybe that's a good place to say that I think as you evolve, you realize the places where you're really good at. And this is part of like your own self-discovery, and where the things that you have blind spots naturally, or there's areas that you are still developing. And I think as a leader, because you have ability to work with cross-functional teams, you can actually augment the team for maximum success if you are being truthful to yourself and really going for the team win, as opposed to kind of like your individual priorities, if that makes sense.
100%. Well, thank you. There's a lot of great content in there. And you were about to sort of make the point about the IPO process. I remember when I was working for the TSX, we would sort of famously say to found it does feel like, to the founders at least, and to the executive team, this is like the Super Bowl. You really, it's like the championship of entrepreneurship in many ways. And hopefully, if it works out and if it bodes well in the public markets, but just reaching that pinnacle, and whether that's a private exit through acquisition or going public, just having that milestone is really fun, but it also carries a lot of weight. And there's a lot of organization and prep that you have to do beforehand. And even once you then go public, you just have to, the team, the way it functions and operates, there's a different level to it, right? It demands more internally with governance and kind of how functions operate and processes and all these things. Looking like, was that a fun experience? Was it interesting? Would you want to do it again? Curious, because there's obviously there's different perspectives on it. So I'm just curious, having gone through it.
I definitely would love to do it again. I think it is a lot of work, but I think it's people who you work with that make a big difference. And I just think it's almost like, think of it as like a boot camp. You go to boot camp and you have your 20 buddies. And after the boot camp, you become the best buddies of all these people because you eat together, you work together so much time. So you get to know each other really well. You get to know how you act when you're stressed. You get to know how you act, in the morning, what kind of coffee you prefer, and somebody grabs a Starbucks. So there's definitely that chemistry that gets born out of really well kind of teams because you basically have one mission, and that's to have a successful exit. As far as what does it take? I mean, we had a team of about 32 people between the bankers, the lawyers, the internal staff, obviously, so that affects quite a few functions, obviously all financial functions, but also legal function. There's quite a bit of preparation there, and obviously the C-suite. But you're right. I think it's what I really appreciated about getting ready to become a public company is the amount of excellence that you need to put through and achieve and grow and mature the organization. And it's hard, but it's a way to really see kind of the potential of what the business could be. And of course, when people came up with SPACs and all that, and as they said, hey, let's take you public within 6 months, or some of them gone even sooner than that. And that's a really, depending on the business model and the state of the business, it's really painful, especially for smaller companies to be able to get ready in such a short period of time. I think 2 years is how long it took us to be able to gradually build the practice, get used to the type of different regulations, get used to how we should think about publicly available information versus internal information. How should we tell the story? What kind of metrics we should talk about? How would it, and basically we also had several quarters of dry runs internally to be able to see, like, are these the metrics? Is this the story we want to tell? How would the external investors because once it's public, then it becomes in public domain and people ask you questions about it. And so once you put out a set of metrics, guidance metrics, you can't really take them away. Well, you can, but there's certain, impact and repercussions for that. So, but it's also, how do other investors evaluate investing in shares of Gogo versus other companies? And so you learn quite a bit about that through the preparation process. But I think one of the things I really appreciated is just the standard of excellence and what that could be. Because then when after Gogo, I joined startups, I had to dial back significantly some of the things that you've seen in the private equity setting or in the public traded setting, because you understand that most startups have their limited resources and maybe underinvested capabilities. But the fact that I've seen kind of what that could look like, it gives me much clearer view on what the North Star could be. And I think it's a really great ability to bring that to a specific enterprise. You know what I mean? So I would say public company preparation is giving you that opportunity. I think it's definitely, in a big way, it's a teamwork, and it is a Super Bowl because there's so many things that can go wrong, especially during the day when you price the IPO. And I remember the road show that we flew around, and we got all the investors to put their order in the book, and then we had the a decently oversubscribed, book. But then when you price the IPO, there's always things that could happen with, macro markets. And that's in some ways also a lesson that there is uncertainty in business. Whether you're a private company or public obviously gets, a bit more exposed because there's no way to turn back. So you just have to deal with it. But we priced our IPO on the day when the public markets were down 400 points. NASDAQ was down. We were listing on NASDAQ. And, that's what you do. You just go right through it. There's no way turning back. You do the best you can. And ultimately, this is a long game. And that's, I think, the thing that I'd like to maybe a key takeaway. So part of the standard of excellence, part of things that you do is really you're playing for the long game, and in business as well, whether you're public or private. I think it's important to just keep that in perspective. So I think there's also that saying that, we underestimate what we can do in, let's say, 5 years and overestimate what we can do in one or in the quarter. And that's true. So as long as we have that perspective and as long as we play for the long game, I think we will succeed.
Yeah, that's a really good reminder, that sometimes what people see as overnight success is really decades of hard work, and it all sort of culminates when you're given the opportunity. I did want to ask you a little bit about sort of confidence, and dealing with pressure. And you pointed it out a little bit in the beginning when, you said, look, you got to raise your hand when opportunities strike. And obviously you have to be prepared and put in the reps and have the capability. But ultimately, when you're given the podium and now it's go time, it's easier said than done. And confidence and kind of dealing with pressure when you walk into the boardroom and you're facing, what seems to be an intimidating group of investment bankers, and you're trying to pitch the IPO and you're negotiating back and forth. Nothing ultimately prepares you for that. And yes, you can be the most, what seems like confident and charismatic individual, but at some point it's going to get to you. Did you have, low points? If so, how did you deal with them? Especially kind of navigating this for the first time, like when you did feel a little bit shaken, how do you push through?
That's a great question. I would say in general, I've always it kind of like a two-sided answer. I would say, like, on one side, I have a few folks that I'm very grateful to have in my life that I call mentors. And I always like to have folks that are more, experienced than myself or in adjacent areas. A couple of them are CEOs. And so I think as you go through some of these situations, a lot of the folks that I can, call and sort of draw on their wisdom have been there, done that. And so they kind of give me that perspective that makes me believe that, it's a little bit helpful to kind of understand that this is, many folks have been through that. And so this is just an opportunity to grow and learn some things. And so I use that circle of mentors. And second, how would I get through this? I think in many ways, through the stressful periods of time, I think it's just and I'm, trying to balance as much as I can. But it's all about, maintaining your emotional, physical, kind of like balance. So making sure that you are not getting to the point where you're so burned out that you are not able to give at least, kind of your best self to work, that kind of thing. So I think when the stress happens is really just trying to take a step back and say, what are the things I need to make through this? This is a relatively defined period of time. And whether it's an exercise or, nutrition or whatnot, or ability to socialize some ideas or talk to your mentors, I think is really important for support. So I think those would be the things that I default to, is if that makes sense.
Yeah, definitely. It's kind of like marathons versus sprints,
Mhm.
and sometimes in your career, you might have both, and both require different training, different approaches, right? When it's sprint, it's kind of like a lot of power is involved because it's very short in term, and you might have late nights and you're really pushing through because there's a quick action and result that ensues. And marathons, it's maybe a longer term project and you have to really sustain the effort consistently so that it compounds into something maybe 6 months, a year down the road. But that requires a different mindset, different approach so that you're not burnt out by month 3.
Right. And I think on a personal level, I think, I don't know, maybe that was also part of your question is, the more the more we do certain things in life. I mean, obviously, the more prepared and self-confident we feel, right? So like you have that self-trust that even if you haven't done that exactly 100%, but you've done 80% of it elsewhere. And I think it's something that comes with more of an experience. So folks, start believing in yourself a bit more. But at the same time, we're also, I think an opportunity to sort of like be comfortable to stretch yourself and realize that, yes, by saying yes, you're going to take a certain amount of risk, but you either, do what you're supposed to do or you learn. And so there's really no fail in that sort of setting.
Yeah, that's true. When you after Gogo, I know we leaned on it as a case study. You become a first-time CFO on paper. I know obviously you came with a lot of baggage and really really good experience. But formally, I think BenchPrep was your first CFO, if I'm not mistaken, right? You then obviously become a three-time CFO. It's like you have 3 rings. You're 3 away from Michael Jordan, Varvara. So what I really wanted to ask you is what do the first 90 days look like as a first-time CFO?
It's a great question. I think there's actually a great book on the first 90 days.
By Harvard, is it HBS? Harvard Business
Yes.
Review? Yeah.
Yeah. Which I recommend, I think, for folks kind of transitioning into important, like big roles like that. And I would say, I think from my perspective, when you join a business, again, it all starts with relationship building. For me, like it's number one. People is number one. Forming relationships with your peers, obviously with the CEO, with the board, are very critical. With your team, very critical, as well as with, I would say, extended leadership team. Like I always kind of try to go beyond my peers, because I think you get to understand and appreciate the business a bit more by learning what other people do and how that all kind of comes together. So, but I think relationships is number one for sure. Obviously, the other thing I usually follow a very simplistic kind of like model that's people, process, systems, and data. So you can think of that. So people is through the relationship aspect of it. And then you need to very quickly understand where we are from the process perspective across the business. There's some key processes, finance, operations, product, R&D, you name it, sales. And so very quickly you can kind of, get a kind of health check of what's working, what's not. And there's a handful of those. So like for folks working in finance, I think they would recognize, certain things. So that's that. So that's on the process side. Systems is, especially now at Avidbots, I'm getting more and more experience, I would say, connecting the different systems and the infrastructure and AI and some of that stuff. So I think that's the company that kind of gets to put my knowledge to the test. But in any case, I think the systems is important because, especially for finance folks, what's the source of truth? When you join startups, you may be surprised, depending on what kind of ERP they have or may not have in the ERP. Like there could be all kinds of different situations. But understanding what systems feed your data so you can understand the financials and trust the financials, I think is going to be really important, because ultimately the CEO is going to look to you for and trust you that you're reporting accurate financial information. So I think so systems is extremely important to understand. And then third, or the last one is data. Data is becoming, to me, like it was usually like intertwined with systems, but like right now it's becoming even more so important with all the new trends of AI and what AI is transforming and enabling us to do. So I think data is where is your data housed? What kind of data do you have? Because ultimately, if finance folks are storytellers, very quickly, you need to be able to understand like what goes beyond the gross margin. So what drove the gross margin? And so once you start unpacking the different functional data sources, you need to be able to explain that. How fast can the company grow? Well, let's look at the market share. Let's look at the conversion rates. Let's look at the verticals. All of a sudden, you're outside of the financial data set and into the sales and go to market and those types of things. And so how do you tell the story if you're not able to kind of stitch together some of this information, for example, right? So, or, there's companies that's, for example, SpotHero. There's all about how many people are in certain geography in a certain market, and how many parkers, how many commuters are there, how many events, and so forth. And so all of a sudden, so it's not just enough to say how many folks, bought a parking spot, but you need to understand the dynamic behind it and what's sort of the makeup of those. So very quickly you get into the marketing data sets. So anyway, I think data is crucial. And understanding kind of the lifeblood of the company through the data elements and stitching that together is important. Or understanding what are the silos that exist and, where the investments need to be made to improve that.
Hmm. Well, speaking of, and thank you, by the way, beautiful framework. I'm going to end on, hopefully, I guess, an optimistic or maybe a not so optimistic viewpoint, depending on your answer. But I guess for people listening at this juncture, if you've stayed on with us till the Avarian, we thank you. Would you actually recommend someone go into the finance field in the wake of all this AI disruption and people kind of worried about, especially for, more junior kind of roles, more entry-level roles that touch kind of FP&A functions and a lot of the processing. But obviously, if you're starting out and you're fresh off, graduating university, these are the roles that you typically would go in, 5-10 years ago. So if someone comes to you today, what is your advice?
100%. People should pursue their passions. And definitely, if you're passionate about finance, I think what AI is going to do is going to transform how we do work. But I don't think it's going to replace the entry-level positions. I think what's going to happen is going to be a shift of what people are working on. Right now, I see a lot of entry-level folks, spend time on crunching the numbers, building the models. Now you can actually devote some of this time to building relationship with your key stakeholders and understanding how the dots are connected, and maybe connecting a couple of data sources to be able to be a more informed, a much better model versus, and really kind of a supplementing with AI. I think I was just at the AI summit last week, and the key theme that came out, of there is, and of course, like it's pretty amazing how fast AI is changing and accelerating the pace of change in business or in our lives, whatnot. But a key kind of theme came out is I think AI is going to really help us to become co-creators of the business. I don't think it's going to replace it, but we're going to basically use agentic models and just become more efficient or start understanding certain areas that we didn't have time to understand before. I think for anybody young who's going into the finance career, I think it's an amazing journey. It gives you such a great roadmap for success and growth, and you can apply that to any company and any business you join. So like it's one of those very versatile understanding of how the numbers come together. And if you're passionate about finance and you're passionate in a certain industry and making a difference in the world, you absolutely should pursue it while also embracing AI skills. So when you do join, you could actually be extremely valuable junior member of the team that comes with ideas and skill sets some of the other folks in the company may not. So like I would say, absolutely pursue your passion, and I don't think AI is going to replace junior members of the team.
Love it. Well, I'm glad you at least ended on a sort of positive thought and direction. It's definitely appreciated. You, unsurprising to me, but have a stellar story. V, I'm super appreciative of our friendship. I always learn a lot from you. We finally have it on record. I can't wait to publish this episode soon, and
Thank you.
hopefully it was a fun time for you as well.
I had a blast. Thank you so much, and thanks for giving me this opportunity. I really appreciate it.